Hello, everybody. Charlie Sidoti here, Executive Director of Innovation Underwriters. Innovation Underwriters is a nonprofit focused on fostering innovation in insurance and risk management. We are located in and strategic partners with Cambridge Innovation Center, and we have an incredible panel today that I will introduce, and the topic today is focused on the intersection of insurance and innovation and emergency management. Today's panelists are Craig Fugate, who is the former FEMA administrator under the Obama administration. He's also creator of the Waffle House Index, which is, if you follow emergency management, all is an amazing thing. And also the chief emergency management for the startup One Concern. We also have Michel Leonard, who is the chief economist for the Insurance Information Institute, an insurance industry research nonprofit. And finally, we have, and Craig was also, Michel was also the chief economist for Aon and KKR as well.
Not to contradict you, I was chief economist over at Aon, but I'm a senior economist at III. We have a fantastic colleague of mine who's the chief economist.
Okay, I apologize, but your esteem is no less, that's for
exactly.
Sure. And also Lieutenant Commander Dan Murphy, who is a professor of emergency management and homeland security at both Maritime and Northeastern University. And he's also has a history of consulting at EY, PwC, and IBM, and probably more beyond that. And today's topic, there's a tremendous amount of interest and discussion about coronavirus and how to respond and all the things everybody should be doing. As you look, the four of us are all in our homes, locked down, which is a sign of the times. But what we wanted to do was talk today, specifically, we're happy to talk about some of the issues related to coronavirus, but we wanted to actually go deeper. Dan and I started this discussion about this panel, and it was supposed to be a physical event at Cambridge Innovation Center with a nice dinner and a bar and networking and people kind of meeting and talking about the issue around innovation, insurance, and emergency management. It didn't work out that way because of events, but we still want to take that kind of longer term vision around the initiatives that we are driving and discussing and kind of talk about them here in this kind of online format. With that, I will start with Craig and ask Craig to weigh in on just your initial thoughts around the whole issue of innovation, insurance, emergency management, how they merge, how we can work together more effectively, efficiently going forward, and what the future portends for those issues.
All right, well, in general, I think when we talk about all these different programs, I like to break things down into what I would call the normal steady state. Most systems in government and insurance are really built around expected events, things we're used to handling. But when we see extreme events, such as the current corona pandemic, we see climate disruptions that are disrupting all of the pre-planned models and assumptions. When we see the term record-setting event for weather being issued almost monthly, we're reaching this point where a lot of our systems were built around what we've dealt with in the past, and the future is changing rapidly. And if you look at, particularly in climate, I think I go back to President Obama in 2012 when he said, the debate about climate change is over. We got to start talking about climate adaptation. And I think if we only do what I call a government-centric approach to problem solving, trying to do this through regulations and incentives and disincentives, I think we miss one of the big drivers in decision making, and that is the insurability of risk or pricing risk appropriately. So I kind of see, when we talk about climate and other large scale natural hazards, this nexus between insurance pricing risk and government looking at how to respond to increasingly more challenging situations. But I think for everybody, it's no longer business as usual. And what used to work for us is not working in the future. And we need to be prepared to do something different. And that tends to be the question. What is it we're going to do different or differently? So in the middle of this current pandemic, floods aren't stopping, severe weather isn't stopping, climate disruptions are not stopping. And so particularly for emergency managers, the term all hazard, I think gets, underappreciated. That it wasn't just about weather-driven events. It wasn't just about earthquakes or wildfires. It was when the community's coping mechanisms won't work in a crisis and they have to do something different. We talk about emergency operations centers. A lot of people talk about what they do in the process. I look at them a little differently. I see emergency operations centers as bringing together members of the team from different parts of government and the private sector to become a problem-solving engine. The things we know are pretty straightforward. The things we never dealt with before, it's important to bring those folks together in an environment that allows them not just to do what they've always done or try to apply the org chart of government to the problem, but to really focus on the outcomes they're trying to change. And in some cases, take past experiences and past practices and apply them to the new problems in a fast method that also is designed to have feedback when things aren't working, to understand you got to change what you're doing instead of just keep doing what you're doing and hoping it gets better. I think that crosses over from the standpoint of insurance industry and trying to service and manage claims better, price risk, make new products available, but also it goes back to this underlying theme, I think today, is that complexities of emergencies and disasters are growing almost exponentially, yet many of the systems we're trying to use were built for events that have not reached a scale, and they're not scaling up well. So the question I want to ask is, what are we prepared to do differently in a changing world?
Just a quick follow-up on that, do you think, you talk about the rate of change and the growth, the exponential growth of the hazards and the impacts and the frequency, do you think the pace of innovation is fast enough, is kind of intense enough to kind of keep up right now?
No. I think it's an inherent nature of bureaucracies, both in the private sector and the government sector, to resist change. There's this tendency to be very risk averse. And so we build systems and couple them to our challenges, and we get great success out of the more routine, reoccurring events that we would expect. But when the events are much larger, they get to this tipping point that the coping mechanisms aren't going to work. We usually flounder because it's hard for systems and people to recognize that the situation now calls for different responses. I'll give you an example, very basic oversimplification. You have a house fire, you dial 911, the fire department responds and puts out the fire. Now, to you losing your home, that's a big deal. But if you think about it from the standpoint of local government and the insurance industry, that's a very normalized event. We have built systems around that. We understand the risk, we understand, the capabilities, and we have built both on the government side and the insurance side, to deal with things like house fires. They're tragic to the people that are involved, but the system's actually built fairly robustly to deal with that. Now what happens when you head in Australia, where you have an extreme drought, extreme temperatures, and now wildfires are occurring and record-setting. Nothing ever approached this, both from the impacts to loss of life and property. But think about how the government systems were overstressed, how the insurance industry was overstressed, and those systems weren't coping with it. And I think that's what I'm trying to get to, as the disasters are getting more complex, as we have built more vulnerabilities in our systems, and we see higher populations in urban areas, greater dependencies on technologies. The complexity is growing. Yet in many cases, we're still trying to take that system that works very good for that house fire, dial 911 and help comes. and scale it up, and it's not working. And we're seeing this unfortunately being played out with the current pandemic, is systems built for disasters or crisis geographically based are not prepared to deal with worldwide events occurring simultaneously.
Thank you. It's sobering. I'm going to come back to it, but I'm going to go to Michel. How, what are your, can you give the insurance industry kind of perspective and your thoughts on the whole issue that we've been talking about, but also kind of some of the comments that Craig kind of mentioned about the, how we're evolving, whether it's fast enough or what we need to do to kind of adapt ourselves as an industry?
Yes, well, first, wonderful to be here remotely. Wish I were there in person.
Me too.
You know, III is, we are the oldest non-lobbying voice of the industry. We're a think tank, research, data-driven organization. We're member supported. We represent a majority of the P&C industry, and we've been based in New York and DC for nearly 60 years. The industry obviously doesn't have one voice. That's one thing I want to start with,
Yeah.
and certainly, but our message right now when it comes to the crisis, the pandemic, is that the industry first is there to respond, is there to pay the obligation that we've contracted. We're either first or second responder. We were talking a bit earlier as to what the term is, but you know, quite often I had a tree fall here. I'm in upstate New York, so when it comes to climate change, I had a tornado, 2 tornadoes. So I'm well familiar with what that means, climate change, tornadoes, upstate New York. And after taking care of 911, the first folks I called were my insurance company, and it made me feel good, better right away, re-energized, it uplifted my morale to know that they would pay. So a lot of what we're doing in the context of the industry is to understand our role, not just afterwards, but after a peril, but also before. And we believe in preemptive risk management. And we believe that as the perils, whether it be extreme weather events or others, are increasing in both severity and a number of times, we believe that it's important for us to be there and partner with local governments, officials, national officials and governments, as well as consumers, to be able to develop, encourage, identify behaviors that are safer. And one of the cases I used earlier, and I think you liked, was I was in Texas discussing with some FEMA folks and local government officials some of the obstacles that are there for post-disaster recovery, for first responders, for example, for the National Guard going around. And it's the fact that some homes have, it's electricity, and electricity, whether it's down wires or whether it's someone's house's generator being on, well, that creates electrocution risk. So we actually encourage as an industry quite often. Actually, my carrier told me, get something here if you want to have get a generator if you want some of those protection. And so we encourage that, but we can also look at technologies that will have an auto shut off, turn off button, that if there's a water damage around, endangering that. And that right away makes a big difference. That's just a small example, practical example of what the industry is trying to do here, not just in terms of paying the claims and being there. And I do want to reiterate that I was speaking to the NAIC, the National Association of Insurance Commissioner, with our CEO earlier this week, or late last week actually, and we were saying, you know, the industry is in a stable position financially. We are there to pay the claims. We are on hand for that, and that means whether it's health or workers' comp or other areas, folks should not be concerned about that. But in the greater scheme of things here, we want to encourage behaviors before preemptive risk mitigation, as well as afterwards, being there as the source of stability in the financial system we've been for centuries, really.
Nice, thank you. Do you just to kind of follow up on that, encouraging the behaviors? I think you know, in the industry, a lot of that has been done through consulting. As kind of things evolve, and certainly as technology evolves, more of it is being done through actual insurance product design and data-driven kind of practices around embedding in products and services. Do you kind of agree with that, that the nature of the products are driving some of that mitigation aspect?
Absolutely.
Go ahead.
No, you go. I think the work you're doing, for example, in Cambridge with the center and the incubator, the InsurTech community there is incredible. I was hearing your colleague earlier discussing about having met with hundreds of local entrepreneurs in the InsurTech community. I had a small InsurTech company before as well. And I think when we're looking not just at preemptive risk mitigation in the context of extreme weather events and large scale perils, but also in day-to-day operations, the potential there is tremendous. I'm just going to give one example of a company you may have come across. They have an auto shut-off valve for the entire house. So 70 or 80% of premium of losses that insurers pay for homeowners policy come from small leaks that can lead to massive damages, $25,000 on average, for example, for a water leak in a house, because it gets in the water, it gets in the, in the wood floors and so forth, and the plaster. So that's a small technology that can play a huge difference. There's the example of the generator and the switch, the off switch on there. But as you say, it also needs to go back into the product themselves. And one place where, excuse me, one place that, don't worry, I just have just allergies up here. It's just allergies here in the mountains. But the one thing that I was about to say, which product that I went on a sidetrack.
The product design you were starting
to talk
yes,
about. Thank you so much. You're the best. You're the best. Well, one thing that, one area where we're going to most likely see this transformation of the product first is in the auto sector. With telematics being what they are, and insurance on demand. Again, using an example, I drive, literally, I'm in New York, so normally I commute to the city, public transportation. We have a house 45 minutes north. Literally, I drive one road, and I do it twice a week. So this is the changing behavior of, and I'm not unique in that regard. Younger folks, millennials and so forth, younger than me also, are going to be in the world where the nature of how we use cars and transportation is going to be highly different. And the industry is very much aware of that. And to your point about consulting, I think it's been said so much right now, but now it's no longer in this confrontational phase. It's more between the startups and the InsurTech and the carriers. It's in a phase where we're trying to actually integrate the technology. And we see a lot of capital from insurance carriers going into supporting. Many of our members have 100 million plus funds in terms of supporting InsurTech initiative. The one thing I'm going to say, not to spend too much time on this point, is that there is a great deal of need for startup companies to actually better understand from the beginning regulations. I mean, the example that I like to use in this is the story. I was at a great startup incubator out in the West Coast, and they were doing, a little hackathon type situation. And this company said, I'd come up with a way to read emotions in the voice of folks talking about their car. And they said, well, wouldn't you as an insurer, as an auto insurer, love to know if someone loves their car or not? And I just stopped there and I said, that's super cool, but it's not legal in most states. You're just not going to be able to do that. So again, this great technology there, it's important to have great tools, but the hand also needs to be willing, and the regulator's hand needs to be willing as well.
Nice. I love that. Thank you. And we'll come back to that as well. One of the things we try to do at Innovation Underwriters is we do focus on it would be great to do that, and I could do that, but I may not do that. And that really is sometimes the intersection of government regulation and the business practice coming together to try to figure out what is what are we ultimately trying to achieve here. And exactly. Regulations is a reason for them, that's for sure. But everything's transforming around us, so we're trying to help shape that dialogue as well. Dan, coming to you. We've talked about insurance. Your background is deep on the emergency management. Would you tell the audience a little bit about your initiative around Emergency Operation Training Center at Maritime Academy, and then take the discussion, plug into the things that we've been talking about, which is insurance and the emergency management community getting together to address some of these forward issues. How are we going to do things differently in innovation practice? And feel free to talk about, we had a meeting earlier today, a small working group which we're kind of gonna, run over time to kind of identify a specific problem and try to solve it. So with that, I'll kick it to you.
Sure thing. Let me start with something that Craig mentioned. He talked about the inherent nature of bureaucracies, right? I think that there's already been a lot of progress in recent years with the last administration and coming into this administration. We have already figured out, and Craig talked about the EOC as a place to be bringing capabilities together. This is a nut that we've already cracked as a profession. We have already figured out how to, through the use of emergency support frameworks, functions rather, and organizing our emergency operations centers around those frameworks, we have already figured out how to sort of turn the government sideways, if you will, and to be able to take advantage of capabilities across agencies in ways that we have not been able to do in prior decades. In the courses that I teach, I often, when I teach the history of EM, I talk to the students about how things have looked in the emergency management world for the last century, and I give the students the visual of little kids on a soccer field, running up and down the field, chasing the ball. We chase after floods for a few years, and then we chase after nuclear holocaust for a few years, and then we chase after terrorist attacks for a few years, and then we're back over here at hurricanes for a few years. But this idea of all hazard and the fact that we've figured out how to reorganize ourselves using horizontals across all of the vertical government agencies, that's a big step. So the next thing that we need to figure out how to do is to do innovative things to connect those dots even closer, and to take this machine that we've been able to turn kind of sideways. How do you make that machine? How do you make that machine run more effectively and more rhythmically, so that when disaster occurs, whether it's a pandemic or whether it's a hurricane or whether it's a whatever, the machine kind of turns on. We know how an EOC works. We know how all of the various functions within an emergency operations center work. And we, as we roll through the years, we improve on the way that we leverage technologies to stitch all of the various pieces together. And we're not, and so, and our philosophy at Mass Maritime is that we should not be trying to find what is that one magic software bullet that we should build the future EOC upon. Instead, we need to be building our centers in a way that they can, learn quickly, incorporate new technologies quickly, and you don't have to worry about every EOC doing it the same way. You just have to, you want to worry about every EOC being part of the learning process. So you asked, what are we doing down at Mass Maritime? Down at Mass Maritime Academy, we've had a history of we're good at simulators, operational simulators. If you ever have a chance to visit, to do a tour down at Mass Maritime Academy, please check out the ship simulator, and you can, you go up, you pretend that you're on the bridge of a ship. It really, really, really feels like you're on the bridge of a ship. It makes a lot of people seasick. It's a very, very cool thing. For years, we were trying to do something similar in the way of an emergency operations center. This past year, we got some funding from the state and from Clean Harbors Incorporated here in Massachusetts, and they funded the development of this new emergency operations training center that we've built. Very leading edge. We've basically put in place all of the workstations that you would use to work your way through a crisis. So this is a working EOC. We've got all of the hardware in place so that you can run a variety of softwares. And the idea is kind of threefold for the center that we've built. Number one, it's a venue for our students and for our professors to come together, and we can do exercises as part of our classes. Number two, it's a venue for the local municipalities to come in and do exercises together. And number three, and this is kind of grown out of a couple of the classes that we do at Mass Maritime, it is a venue for us to be more explorative and innovative with technology. And when I say innovative, at Mass Maritime Academy, our students are very kind of hands on the wrenches kinds of students. So we're not looking to be inventing new technologies at Mass Maritime. But what we are looking to do is to create a place where our students and the professionals who come in and exercise with our students have an opportunity to explore a multitude of technologies across all of the emergency management mission areas, and to figure out how all of those technologies can contribute to can be pieces of a puzzle to an ultimate end of greater resilience. So, for example, in the mitigation space, we have a series of scenarios that we take the students through. Scenario number one is we have a mock consulting engagement where the governor of Massachusetts asks our students to make recommendations to the municipalities around the coastal communities, help the governor figure out what pieces of technology can help the smaller municipalities get better at emergency management mitigation. When you go through that scenario, it becomes very real to you suddenly that the challenges that you have as a town mitigation manager are pretty much the same challenges that you have as a insurance underwriter. I mean, you're trying to look at a locality. You're trying to map that locality. You're trying to understand the hazards for that locality, whether it's flooding or whether it's fire or whatever. But you're looking to get down to a very granular level so that you can do detailed planning in ways that you have not been able to do before. Again, I argue that we've made great strides in recent years. Charlie, you mentioned in the old days, you would have to go down to the town hall to get flood maps. These days, you can look at the National Flood Hazard Layer online, and you can see visually flood layers using GIS technology. There's still there's a multitude of data that we have not incorporated yet into that picture. We should be able to not rely on these clunky old technologies like HAZIS. I'm sorry, I'm sure that we have some folks out there on the call, and that's their tool. But a town mitigation manager or an insurance underwriter at this point in history, with all of the wealth of data that we have and all of the analytical engines that we have that sit on top of that data, and all of our ability to put together user interfaces and presentation layers to view that data, we should be able to come together in ways where it makes it easy as pie to be able to look at a locality, click down on that locality, and see a rich array of data that helps you make business decisions, whether you're a town mitigation manager or whether you're an underwriter. So I think that's where a lot of this stuff comes together, and we're seeing it in class. And I've had students say, I don't want to be that guy that pulls people from the wreckage. I want to be that guy that works on mitigation planning for a small municipality. And we've had other students say, I looked at the same thing that guy was looking at, but it's made me think that I want to go into the insurance industry. So I think that there are all kinds of opportunities for the EM community, EM professionals and insurance professionals to work together in this overlap and find some very, very exciting things that we can do together.
We're very excited about that, and part of why we're here is to make that connection. One of the things we try to do is connect. We look at kind of 5 stakeholders. There's corporates, there's startups, there's academia, there's governments, and then there's risk capital. We think convening those 5 stakeholders to look at these challenges and try to solve them in different ways, we can be a force for convening. That's kind of how we look at things. I would like to pose the question as we approach that, what is the top thing that we should be thinking about doing as we have discussions, put together groups, what is the top thing we can do to amplify and or accelerate the transformation in a positive way that is going on in the insurance industry, but also in these kind of intersectional areas where, like Dan was talking about, the intersection of in the insurance professionals and the emergency management doing their own things. And with that, I'll kind of go back to Craig first.
Well, a little bit more focused this time, I hope. I think it's this idea that if we're going to adapt our built environment to climate change, which is happening much faster than we can build it, we at least need to stop building things the way we've always built them to fail. And I think this is in the interest of the insurance industry, because I've heard this said before. Every time insurance industry has to exclude risk because they cannot price it, they would take too much risk for their shareholders. I think the public sees that as insurance companies running away from problems. I think we need to turn that around and go, why can't they insure it? Why didn't we build it where it was insurable? And maybe if we could start bringing insurance and emergency managers together to talk about mitigation and building adapted communities. A tool we could use is, irrespective of your building codes and land use, can the private sector insure that risk at a price that makes sense? And if the private sector cannot insure that risk, probably we need to rethink how and where we're building. In the US, we have I think a challenge here in that we have priced risk so low because of our disaster assistance programs that it very rarely becomes that forcing mechanism. But I asked this question of some folks in Florida a while back. We were talking about Hurricane Andrew that occurred back in the early 90s. And I said, what would Florida have looked like today if there was no FEMA and no federal bailout, and all of that was done based upon insurance and the ability to get people to invest in Florida with the idea of, is the risk insurable? And a lot of the business community leaders did a big sucking sound and said, thank God that didn't happen. But I think those are the kind of forcing mechanisms we need to look at. Is disaster assistance appropriate? Absolutely. But if it's overreaching to the point where there's no incentive for state and local governments to change how and where they're building, I don't know if we can adapt fast enough to climate change. And that's why I think insurance and mitigators are actually closer aligned than they realize, because if we're not building insurable property, the private sector can't participate, and then we're putting all that risk back on the taxpayer. But on the other hand, if emergency managers don't know what insurance industry is looking for, what they are concerned about, what the long-term exposure looks like, and whether or not this is a market they can move into and can they price it where it makes sense, then I don't think we're doing enough to mitigate future risks. So I think there's an interesting nexus here of how do we look at pricing risk and adapting to climate impacts in a way that both starts with how and what we're building and where we're building, and understanding that going forward, in the insurance industry helping us understand the pricing of that risk. And again, we can't forget, we've got a lot of built infrastructure we're not going to fix overnight. I think that's where disaster programs are appropriate, but we are still building in high-risk coastal communities because of programs like the National Flood Insurance Program. And so I asked a simple question. If the private sector won't insure the risk, why is the taxpayer subsidizing it for new construction and new growth that is not addressing long-term hazard risk.
Right, right. Before I see Dan itching to kind of weigh in, before I do that, the audience, if people have questions, we'll go to questions after we go get some comments from Dan and Michel. And if you can submit those under the question tab, we'll kind of get to as many as we can. Dan, do you want to go next? I saw you waving your hand.
Yes, sir. I think, Craig, I think that Craig is spot on. This is a behavioral change challenge, right? And I think that you can look at what's been happening in our society in the last couple of weeks, right? For the first time ever, you have millions of people who are going to a couple of websites. The big one is the Johns Hopkins coronavirus site, right? And people are seeing these big red splotches on a map. And it is making this crisis very real for them. When they see a big red splotch over China and a big red splotch over Italy. Yeah, splotch is a clinical term, right? But that's the point. When you can use technologies to render information in ways that really perk up people's eyes and ears and make them say, oh my God, look at those big red splotches. They're not disease splotches, but in this case, we're talking about flood splotches, right? Oh my God, look at those big red flood splotches along the coast of New Jersey. Why are we building there? Who's allowing these people to build there? Why is it that we're bailing out people who are building there, but are not able to insure the properties that they're building there? Why? And if you think about the potential abilities that we have to present insurance gaps and to tell all different localities and counties and states across our country and across the world that to show the gap, right? So the insurance gap, and to be able to show people in living color, here are our underinsured localities and counties and states, and I think that becomes a real thing.
Nice. Michel, I see you waving. Are you behavior?
Yeah,
Go ahead.
I want to say a few things. First, we launched a coalition last year, we as III, where we're bringing together academia, regulators, local governments, and carriers, and we have a variety of initiatives within that. We call it the Resilience Insurance for Resilience Coalition project, and we're actually going to have a further event in early April, all things being equal. It's hard to look forward to a few weeks right now, but we should be able to move forward with that. But the idea is exactly what you were just saying. And actually, we've done a lot of work on the protection gap. And the idea is to come up with a ways to track the protection gap and to establish a relationship between the protection gap using data and the pace of the economic recovery post-extreme weather events and other man-made and natural disasters. And one of the things we realized using some machine learning and other technologies and in our modeling is that there is an extremely strong relationship between the size of the protection gap and the speed of the economic recovery post-extreme weather events, all things being equal. So accounting for infrastructure strength and other variables and the overall risk profile, even when accounting for that, the relationship is in like, not to get technical about it, like 0.87, 0.95. So very strong. So that's the first thing. And we look forward to working with you all on that because that's exactly what needs to happen. Now, in terms of very concrete things, a question one of my fellow panelists asked earlier is, let's be very concrete here. And for me, there are these much wider policies about where we can build and so forth. But at a very concrete level, I want to come back allergies again. I want to come back to smart homes and telematics. And I think the smart homes here, and that's what you're doing in Cambridge with other insurtech companies and the incubator and so forth. There is a tremendous amount there of possibilities. We see the insurtech, the telematics impacting cars and mobility first, but we also are looking for any ways where we can hasten the transformation of products, not for secondary products in P&C, in homeowners and so forth, but really the main homeowner policy. How can we leverage that and really be able to make a difference there? And finally, there's something that we must all keep in mind, and again, 3 different points here and changing, is that this is a global pandemic. It's one of the biggest, if not the biggest we've had, and we're heading, it's still not where 1918 was, but we're certainly, in terms of disruption, a multiple of what happened in 1918. But I was looking at Bill Gates' 2015 TED Talk a few days ago, and it could have been, today or a week ago, it could be tomorrow as well. And of course, we know what the Gates Foundation has done in Africa, but the virus is a deadly virus, but we're not close to Ebola. We're not close to some of these worst case scenarios that we've talked about. And when we think about the disruptions that are happening across the EM community, the ability to find supplies and so forth, sadly and thankfully, we're not dealing with the worst case scenario, and we shouldn't forget that. And I think that's an easy one right now to forget, and that's probably a conversation to have down the road after all of this, but we certainly need to think about that. Again, I was looking at, as probably a lot of you have been doing, at movies. Well, actually, I was trying not to look at that, but someone in my household was trying to look at all the pandemic movies, and we have a very large screen, so it was hard to keep away from it. But in the pandemic movies, you have no shortage of equipment, and you can move forward with that. And sometimes we think that that's the worst case scenario that we see in these movies, and it's not. So in any case, those 3 points is kind of from the general to the specific that I wanted to bring up here. But we look forward to working with all of you, with the coalition, and see how we can do exactly some of the goals and working together and implementing those.
Thank you. Thank you very much. With that, I think I'm going to pause and see if there's any questions from the audience. Okay. Hold on, we don't have any questions yet. Please submit questions, and what I'll do in the interim is kind of go back to the group and ask about the technology. So as far as technology goes, I think, Dan, you were talking earlier, there's no one silver bullet for sure. But one of the things that kind of we see is a kind of overarching kind of technology is the data and kind of AI/machine learning is transformational beyond anything. So I'll go to you, Michel, and kind of, I know that's your kind of bailiwick, and I'd love you to kind of weigh in on that a little bit. Do you see it as, yeah, go ahead.
No, thank you. I think you wanted to talk to someone else first, so I'll be very brief here. But the, I teach AI at Columbia, and I've seen fantastic visualizations this time around. New York Times had one a few weeks ago where it was very powerful. One of my colleagues will say, data supports a story. It doesn't tell the story. So the visualization component is very important. Something else that we've been doing in terms of making this true, and one of my fellow panelists earlier was saying about how seeing the Johns Hopkins page was very powerful, and it is a very powerful page. I mean, the blacks and the reds and so forth. But we have so much data right now. And what I thought has been incredible this time around, and it wasn't the New York Times stories, and it wasn't some others as well, is that we started to merge together what used to be called alternative with the core data. So in the context of China, there were discussions about bringing in cloud spectral analysis over Kazakhstan and so forth to know what the industrial production, the Chinese are telling us that the industrial production is starting again. So I've seen that for many years, but never in mainstream analysis. So I'm quite excited to see that we're able right now to bring a lot of what's been done in academia, in the military, and starting to bring it and make it available to the public. One of the things that folks often forget is that with Ebola in Africa, one of the ways that they were able to actually anticipate the progression of the virus, and actually to be very effective in containing it was using satellite images of hospitals and traffic, roads, and parking lots of those hospitals, because they could not have, due to a lack of technology on the ground, they couldn't have the reports fast enough. They were handwritten, they weren't digital, and so forth. But the satellites were there, and the satellites were used, and that was something that was coordinated at the time by USAID, and the person who led that, and she was quite recognized, widely recognized, and thanked for that. But so there are different things, and I'm not still seeing some of that here in this context, but I'm excited about that. And one of the things we're doing within the context of the coalition is to actually work with partners in the private sector and to look at how to create standards for sharing data. And that's a very important one. Geopositioning is very useful for that purpose, but we're working with FEMA and some of the teams over there. They have fantastic initiative. We have a memorandum of understanding with FEMA, which includes sharing of data and creating standards. So again, we look forward to finding ways to make that available. And finally, on that, if we go back to the issue of education and developing technology, I was shocked going into academia, specifically in the context of InsurTech, at looking at the lack of data. The lack of hands-on real data. And I'm sure you're nodding, you're seeing the same thing, but I would welcome anyone out there, and sorry, go ahead.
I would like to just say that that is a major challenge. I think everybody talks about risk capital, we need to raise money. A lot of these startups, they don't need a lot of capital. They have a few brains, a computer, they need data. And accessing the data and the and having an organization like yourself, maybe potentially working through us or in other organizations, to make data easily available to startups to look at all these things, it will, I'm very confident, amplify and accelerate the pace of new solutions. And that is definitely an area that we're looking at, potentially trying to kind of make it just reduce friction in the kind of innovation kind of community and the startups.
We're here to help. We're here to help.
So yeah, awesome. Craig, thoughts about just AI and kind of machine learning and the like technology kind of going forward? What do you think is the transformational focus, the big kind of ticket items going forward?
Well, like Michel says, it's big data and getting access to that's the first part. But the second thing I think is the potential for machine learning. And that is, we're dealing with events that have never occurred. And it's hard to get people to recognize how bad something can be. And I see one of our things is, a question that came up is, how hard is it to show officials maps that project bad news, and what's the resistance? And my experience has been, particularly in Sandy, prior to that, we were called up multiple times as FEMA to explain our flood maps to local officials that weren't happy with the results and wanted us to change the results. We're saying, well, but this is what the data says. Well, we don't like it. It's never happened here, and you're scaring people and you're driving down property values. And we had congressional delegation members dragging us back up there, and we did multiple hearings. A lot of resistance to the data. Interesting thing though, after Sandy, we had several officials come back up to us, not in a public forum and not in the media, but said to us, your maps were pretty accurate. So that being said, I think things that haven't happened, or projecting things like sea level rise or extreme rainfall events, until it's actually happened, there's a sense of disbelief that this is a common thing. I've heard this so many times, it's like, it's classic. I'll hear from local officials when we're telling them how bad something can be, and they'll tell me, I've lived here all my life. It's never been that bad. It's not going to happen. And then we go back after disaster, and people tell me the same thing. I've lived here all my life. I never knew it could be this bad. I think the potential is less so in response. I think there's some really cool applications in response, but I think it's in preparedness and planning. You hear this term used a lot, failure of imagination. People never thought it could be that bad. But can we use machine learning and couple this data in a way to get meaningful products, particularly for climate, where impacts are changing, and a lot of the tools we use to measure a price risk, like a 100-year return rate or 1% risk, isn't really making sense in extreme events. we can't build to the 1% risk anymore. We really have to think about these extreme risks and understand them better. And I think this goes back to coupling the ability of machine learning to look at tremendous amounts of data and help us project what this would look like in a way that then we can take to local officials and go, here is our future, not our past, of what we need to be thinking about for our communities to build more resilient infrastructure and resilient communities.
Nice. Michel, I saw you raising your hand. I'll give you a minute, and then I'll close out with you, Dan.
Absolutely. I don't want to take too much time, too much of my panelists' time. There are times there are times that Chevrolet does all the job, you know, or a Honda Accord will do the job, and there are times we need a Ferrari. And machine learning needs to be used in that way. Sometimes we don't need machine learning, but I was just talking about the model that we built for recovery and the relationship with insurance, the coverage gap. We could not have, it was fairly, quote, it was fairly feasible in the context of machine learning. We got relationships. There's no way in the world we would have gotten that under traditional, you know, statistical models.
Nice. Michel, another question came in here. Is the insurance industry agile enough, do you think, to keep up with the fast-moving tech and all of these issues that we're talking about: disaster, crisis, changes, transformation?
Yeah. I was just going to put it very rapidly. I've seen fintech and I've seen insurtech. I have found that the banking world was much slower to respond. I was an insurance person with also a finance background, and I actually thought it wouldn't be that way. I thought banks would be faster. But, you know, since online brokerage was invented by Schwab and John Reed invented the ATM, you know, really what has the banking industry, quote, quote, I'm just being a bit, you know, a bit proud of my industry here as an insurance person, but we are about to transform the world. And you know, ATMs and so forth were out there, but with the ability to integrate smart home technologies, we really are going to be able to change the world. So yes, I think the insurance industry is actually doing very well, understands, and you know, we have a bit of a chip on our shoulder in the industry as well. We're not as good as banking and so forth. And I think there's really no reason for that. I'm very proud of what we're doing. And yes, the answer is yes.
Nice, thank you. Dan, I got a question for you. You talked about making flood maps, flood risk public on interactive maps. Do you find governments and leaders unwilling to be the bearers of this bad news? And I think this goes to your point too, Craig, and actually host projected data? If yes, so do you think the governments do not want to be the bearer of some of the bad news about I think they're talking about the built environment. If yes, thoughts on how to overcome that?
Yeah, absolutely. And I think Craig handled that a little bit, but I think you have to sell, you have to sell the idea of resilience, right? A company like Amazon, when they're trying to figure out where we're going to put our new warehouse, yes, they're interested in payroll costs. Yes, they're interested in local tax rates. Yes, they're interested in political predictability, but they're also interested in resilience. Are you going to build your warehouse in a community that is known for being hazardous? Or are you going to build your warehouse in a community that is known for being resilient? And so I would say that this is something that you know, if I were the mayor of Unluckyville, I would want to do something to change the name of Unluckyville, and you do that by being able to make the case that it's better to come and do business here. So I say let the market play this thing out. But yeah, absolutely, we have to. You know, it's a change management challenge, right? And you know, to Craig's point, we heard those stories about what went on in New Jersey, and that's a very real thing. It's something that has to be managed. Absolutely.
And one final question, which is literally a follow-up on that one. It doesn't say Unluckyville, but it kind of it says use Paradise, California as an example. We learn lessons from these events. Do you think, and I'll put this to Craig, do you think that those lessons are absorbed? And if so, fast enough? And if not, how can we accelerate the absorption of the lessons learned?
Well, I think in Paradise, and I think particularly California, both Governor Brown and current governor, this was something that the state took very seriously. They're looking at doing things differently. There's been a lot of things that have come out of that. But I think the underlying issue is that built community didn't just occur overnight. And so solutions won't change that. And I think that's our challenge. We have to understand where our vulnerabilities are, where the built environment is very vulnerable. We may not be able to do much more than life safety. There were some lessons learned that may have be applied next time, but we can't change the built environment fast enough if we keep building the way we've always built. So California's done a lot to change their building codes in the wildland interface area. But I think Paradise showed something else that's a little bit more scary, and we've seen this in some other communities. And that is the term resiliency is used by a lot of folks to mean a lot of different things. But I always looked at resiliency as how resilient is a community's tax base to the risk it faced. And we have seen now that Paradise lost so much of their tax base without a lot of assistance from the state of California. They're going to have a very difficult time even doing the basic forms of government, much less rebuild. We saw this in the Florida Panhandle after Hurricane Michael, where some of the communities lost 70–80% of their tax value. At the same time, they held bonds that servicing that debt may be in jeopardy. We've seen the bond industry starting to really look at how much risk do we have in issuing these bonds, and do we need to increase our interest rates to reflect risk that isn't being mitigated? So I think a really big measure, which comes back to insurability, insurance, and the roles the industry plays, is also how resilient is a community's tax base versus the hazards it face, and what communities can do in the short run to build resiliency. One of those is transfer risk through insurance, but that means you have to have a risk that's insurable. The other is build and change your building patterns to build more resiliency in your infrastructure and construction so you have less future losses. This will all be driven by very big macroeconomics, pricing of available financing to local and state governments through bonds, and also risk transfer by using insurance products.
Thank you very much. We are at an hour, and I want to be respectful of all your time. I also want to thank you. I personally learned a lot from this discussion, and we are grateful for each of you, both on the panel and in the audience, spending some time with us today, especially in these times. Everybody's in their house. So we are grateful for that. We are Innovation Underwriters, Charlie Sidoti, the Executive Director. We hope that you'll come to our website and you will participate in this further additional events in the future, and we look forward to kind of working with everybody on the panel, in the audience, as we all kind of address these very difficult issues going forward. Thank you very much.
Fantastic. Thank you so much.
Thanks, guys.